Part 1. The Real Power of the Fed and the Monetary Game Market Collapse Warning. Government Control Hand. Fed and capitalists. Who do you think controls the money flow of the United States? The U.S. government? The Treasury Department? The President? Wrong. The real answer is the Fed, the U.S. Federal Reserve. An organization not part of the government, yet more powerful than the government itself. When the government needs money, they can't print it themselves. They have to borrow. And the one who decides whether to lend or not is the Fed. Fed injects money. The government has money to spend. Fed doesn't inject money. The economy stalls. Back when Donald Trump took office, the U.S. National Treasury was nearly empty. Trump repeatedly pleaded with the Fed to lower interest rates and inject money, but the Fed flatly refused. Trump was furious, but he couldn't do anything, because the Fed isn't family of the government. The Fed is an independent boss, backed by powerful financial corporations. It may sound unbelievable, but in reality, the U.S. government is just a borrower, while the Fed is the supreme central bank, the lender, the rate setter, the controller of the currency. Part 2. The Mar-a-Lago Agreement and the Global Financial Power Play. If national finance is a family, then the Treasury Department is like the wife managing the budget. But if there's no money in the safe, then the wife can't decide anything except to borrow more. And in this case, the husband holding the safe is the Fed. From here, you begin to understand why Warren Buffett and Wall Street can steer the market, why the Fed can change the entire U.S. economy with just one statement. And you, if you don't understand this monetary game, you'll always be chasing after the money flow. If you think the U.S. government is simply issuing bonds to borrow money like every other country, then get ready to hear a plan that might give you goosebumps. It's called the Mar-a-Lago Agreement, a power game orchestrated by the Trump administration, akin to a geopolitical chess match. The U.S. government will no longer borrow in the usual way. They will force countries holding 30-year U.S. bonds to exchange them for a new type of bond with a maturity of up to 100 years. Sounds absurd already, but there's more. Those 100-year bonds have no interest, cannot be sold on the market, cannot be liquidated, meaning assets are frozen for a whole century. You may still own $1 million, but you can't spend, can't sell, and can't reclaim it until 2125. That's no longer borrowing. That's soft confiscation. Part 3. Survival Strategies. Amidst a financial storm. If you disagree, Wikipedia. The U.S. will increase tariffs, impose sanctions, and block your access to technology, especially AI and advanced chips, simultaneously declaring, if you don't cooperate, don't expect protection. So, what will you choose? Money from the past? Money from the future? Or national survival? That's why China, Japan, and even the UK have started dumping U.S. bonds. They know if this agreement is signed, they'll be trapped forever. But that's just the tip of the iceberg. The Mar-a-Lago Agreement isn't just a contract. It's a global lever to transform the U.S. from a debtor into a creditor. While you're busy thinking about the stock market, they're rewriting the rules of the entire financial world. While the world is still pondering whether to invest in the U.S. stock market, the richest and most powerful on Wall Street have quietly withdrawn. Warren Buffett, over the past 10 quarters, has continuously sold stocks, from Apple, Coca-Cola to major banks. He's been offloading them one by one. Why? Because he knows what most investors don't. A financial storm is approaching. If you hold a massive amount of stocks, would you go around proclaiming that the market is about to crash, thereby devaluing your own assets? No. You'd say positive things, pump out good news, make others believe, then quietly sell off portions. But now it's different. When even Buffett and major investment firms no longer praise the market, but instead issue public warnings, that's a clear sign. They've almost entirely withdrawn. And if the flag bearers have left the game is about to end. But don't think you have no chance. Because in every collapse, there are always two sides, those who lose everything and those who become richer than ever. Wikipedia. No one forces you to invest, but if you don't understand where the money is flowing, you'll be swept away without anyone pulling you. This isn't just a typical downturn. It's an unprecedented asset transfer in history. If you've seen the signs of collapse, the next question is, what should we do? Should we short US stocks? Should we dive into investing when the market is bleeding? Sounds enticing, but extremely dangerous if you don't understand the nature of the game. Before the market truly plunges, there will be a short-term rebound, like a sweet deception. You think the bottom has arrived. You catch the bottom, but in reality, you've caught a temporary peak. After that slight bounce, the market free falls, leaving no time to react. You want to sell, but can't. Even regretfully holding on, only to lose everything. This is the final bull trap, where millions of small investors get stuck. I'm not trying to profit from that short-term rebound. I choose to withdraw when the market is still exuberant and strike when everyone has given up. If shorting, I'd choose the weakest stocks, the most overvalued, lacking substance, and I'd only act when the trend is as clear as day. For most people, holding cash or gold is a wiser choice. You don't always have to rush into the market. Sometimes, staying still is a survival strategy.